When you look at your syllabus, in this particular topic, number 9, no, actually number 14, is it number 14? No, I'm reading a wrong one here, but we shall overcome. So let me come here and look for advanced financial management. But it's the same. So they want us, currently we have been able to do this crowdfunding. We've been able to look at blockchain technology, cryptocurrency. So today I want us to look at these two, behavioral finance and the big data project finance. Behavioral finance and the big data project finance. So in terms of behavioral finance, ladies and gentlemen, when people talk of cognitive dissonance, there is a time they brought this thing and nobody was able to get this easy English, cognitive dissonance. Cognitive dissonance, like that. So to get me started, is there somebody who can explain to me what do you understand with this word? What do you understand with this particular terminology on cognitive dissonance? I'll give you 2 minutes before I start my today's session. You guys must be able to give me the meaning of this. What is cognitive dissonance? Anybody who has ever heard of this, I give them lunch. I'm giving you exactly 1 minute as an icebreaker, as an opener. Because when they brought it here some time back, nobody was able to get this. So I'm waiting to hear from you who is going to take my lunch today. Not feeling comfortable? Yes. Not feeling comfortable with a certain what here? Certain behaviors. Not feeling comfortable with certain behaviors. E.g. Muslims not feeling comfortable with pork here. We have what we call cognitive resonance, where the set of beliefs you have are well aligned. When things resonate, we talk of what here? Well aligned. Yeah, our thought processes are well aligned. But when we experience what we call dissonance, it means disagreements in our thoughts, in our beliefs. So somebody is talking about discomfort, which is very good. The discomfort a person feels when their behavior does not align with their values or beliefs. Can we take Keziah's definition? Yeah, Keziah's definition is what will go down. So in this case here, cognitive dissonance is the discomfort. It is the discomfort that a person feels when their behavior does not align with their values or beliefs. The discomfort. I mean, you're forced to do it. You know for sure this is not what I believe in, but I'm forced to do this. All right? So I'm uncomfortable. The discomfort a person feels when their behavior does not align with their values or beliefs. A very good example will be this. You are running a business, for example, like RCM, and you know for sure your teachers need to be paid better. They need to be paid much, much better. This is a bad example. You don't do it that way, but just an example for you to see. And then you are the director, assuming you are Joshua Ura here. So you have like, say, 20 million Kenya shillings in the bank account belonging to RCM. Now, with this 20 million, when you're walking around, you get somebody who is selling a very, very serious property. So this property perhaps could be going for 18 million, and you can see some future value out of it. But you know for sure, if you commit this money to this property, then you will not be able to pay your teachers. So then at the back of your mind, you really be uncomfortable as you buy what here, as you buy this particular property. So here we have what we call competing thoughts, which are not aligned. All right. Just like, for example, if you look at what we call balance scorecard. I hope you guys are able to hear me. I hope you guys are able to hear Mwalimu, because I've seen a signal on my internet. Are you able to hear Mwalimu? Today people are getting lunch. Yeah, you are guilty. I like that, Francis. Yeah, clear. Thank you very much. Thank you very much. So you are guilty, sort of. And we always find ourselves in this particular area every now and then. When in this case here, there are conflicts between our thoughts. We have cognitive dissonance even between couples. So you get some money, your wife wants you to put this kind of a structure, and then maybe as I'm there, you'd want to go and clobber 1 or 2 bottles somewhere with friends. So, and then you start in this case here fights in between. So cognitive dissonance could be for you alone. It could be for the whole government, where, for example, you are telling people that the economy is improving, but yet you know for sure that things on the ground are not working. Yeah, your thoughts are not resonating with reality. The belief systems are very different, and yet it is one body that has to execute. So this cognitive dissonance comes in very well, ladies and gentlemen. Yani unasema kwamba vitu kwa ground ni tofauti. Tunasikia kitu kama hiyo. Vitu kwa ground ni tofauti. Ladies and gentlemen, even before I introduce my today's topic, please listen. This cognitive dissonance, even in terms of our investments, normally what happens, you see people online saying that all of us should go and, for example, plant this kind of a crop. That when you plant this kind of a crop, you will get in this case here 20 million, 30 million. And then you start in this case here, preparing your capacity, your mental processes, knowing that, once in this case here, I put in this money, I'll become, in this case here, a multimillionaire. You go in and invest. Once you invest, you start, in this case, you're getting confused, because in this case, what was going on in your mind is not what you have found on the ground. Things are very different. So in this case, you shall be able to experience what we call cognitive dissonance. It's quite a bad situation, especially when the things are very serious. When the difference is so serious, it can affect you mentally. It can affect you mentally. I'm so sure even in this group, there must be somebody who went into this business of quails. Is there somebody who remembers the quails business? Could we be having anybody who remembers the quails business? Anybody who could be remembering the quails business? Quails business. That's not the spelling, but already the message is at home. So you went there expecting this profit, but you are getting almost nothing. You're even forced to start eating your own birds, which will overcome. So cognitive falls in this chapter, very important chapter that we shall be looking at today. Very important chapter that we shall be looking at today, as behavioral finance. Known as behavioral finance. Behavioral finance. Psychological finance. So with that introduction, mine will be to read for you pretty first. So behavioral finance is a field that now combines psychology and finance to understand how emotional, cognitive, and social factors influence financial decisions. It challenges the assumption that individuals always make rational, logical decisions in markets. Key concepts: cognitive biases, mental shortcuts that lead to errors in judgment. Examples: people are overconfident. When you are overconfident, you'll not be able to do your due diligence very well. Belief that one's knowledge or ability is better than it is. Yeah, you believe that, I'm very well versed in this industry. Whatever decision I make will be okay. And then it ends up in a dissonance way. Then we have anchoring. Anchoring is very, very bad because under anchoring, you will tend to rely on the piece of information that you encountered at the very first. So like now today, I'm in Kajiado. I love Kajiado County because this is where I operate from, right? It's a very good county. All right. Right. So you come here, you get to see, for example, a very good piece of land somewhere. And then, ladies and gentlemen, you simply get to believe that, if that person tells you I'm selling to you this thing at 2 million, if you are anchored onto the belief that this is the very best land, you will not be able to make the correct decisions. That's a behavioral aspect here. I mean, we have a lot of land in Kenya. Why should you be fixed on something? That if you're a man, for example, you see a girl and say that this is the very best, that is anchoring. An anchor is a point of what your point of reference. Once you're anchored, you're like a ship that is tethered. You keep on revolving around there, forgetting that there could be other greener pastures. Anchoring, very, very important. Anchoring can make you get into dissonance. You must be an open-minded investor. All right. At times, in this case, you walk around, tell these guys that I have to look around. All right. So never be biased. Never allow your mind, your cognitive, never allow your mind to be biased because of this anchoring. So anchoring, relying too heavily on the first piece of information encountered. And then we have another form of bias where you simply like profits, profits, profits. You hate losses with a passion. Of course, nobody would want to make losses. But whenever you get into business, ladies and gentlemen, you should be able to know that losses are part of the game. So loss aversion, the tendency to fear losses more than valuing gains. So if you fear losses, then there is no way you'll be objective in terms of what your investments. Now, number two, a very important concept, emotional influences. Feelings like fear, greed, you want it all for yourself, and excitement often drive decisions, leading to market overreactions or irrational trends, e.g., what we call stock bubbles. Like right now, all my friends are talking about buying shares of Kenya Airways. That is what is trending at the moment. When it trends like that, chances are these other guys who will be coming in later, will be making a decision of going for this share out of emotions. Remember, whenever you are emotionally influenced, you will end up doing what we call buying, making an impulse purchase. Just purchase even things that you don't need, simply because somebody has convinced you that this is very, very good. Very, very good. Which is very, very close, ladies and gentlemen, to what we call hard behavior. They'll be able to make sense when I continue. At first, they may not make a lot of sense, but they shall be able to make sense as we continue. So hard behavior, people tend to follow the crowd. This is very, very common, very similar to this. They tend to follow the crowd, which can cause market trends to be exaggerated or disconnected from fundamentals. Remember hard, just like the hard of kettle, hard of kettle, hard of kettle. So hard of kettle. So once in this case here, we have like one of those, hours which are on the front line. Once we have one of them saying we are moving this way, then all the other, like sheep, they follow the leader. This is what spoils us as human beings. You get one person tells you that there is everything nice about Shakahola. Let's go to Shakahola, all of us. And then you start getting people moving. They follow this person here. When they follow this person to this particular area, the price of land there will increase. And then at the end of the day, you get somebody there who is bad, who now takes advantage to do bad things. Ladies and gentlemen, at times, in terms of finance, for you to be objective in whatever you're doing, it will at times call upon you to make individual decisions. You must call at times yourself into a meeting. In this case, there are those many thoughts in your mind. You don't have to be shepherded by anybody like a herd of a cattle. I can't start a business. I can't start a business A, simply because I've seen in this case here, my friend has been doing very well in business A. Yeah, I can reshare again, no problem. All right. At times, ladies and gentlemen, we must be trailblazers. We shall be doing things individually without looking at the group aspect of it. Because when we talk of behavioral finance, we are looking at other factors that may make you go for this investment, which are not related with money. It could be your friends who are pushing you there. It could be your ego, the ego that you would want to be seen, that you're doing very well. You end up buying a vehicle which you never get to use fully. It could be an impulse purchase that I'm a girl, and being a girl, I've gone to a supermarket. Now I'm seeing this perfume, I'm seeing this one, and then I need all myself. So what do I do? Impulsively, I just purchase without having what here, any budget, without having any budget. So whenever we talk of behavioral finance, we are looking at psychology, bit of investment. Psychology. This psychology, you could be cheating yourself, all right? You could be influenced by your friends, all right? Like the concept of being shepherded, the hard finance. I mean, great things you're learning here. So hard behavior, people tend to follow the crowd, which can cause market trends to be exaggerated or disconnected from fundamentals. Framing effect, decisions are influenced by how information is presented, e.g. gains versus losses, or positives versus what are negative framing. This framing is quite a common thing. Like when Safaricom wanted to do its initial public offering, IPO, what did they do? They gave us a very good prospectus. A prospectus that showed us that really Safaricom is a company on the run, on the move, good moves. So they framed a story and we were able to buy the story. We bought into the story. We put the shares, we oversubscribed. So it's called framing. So whenever we talk about, ladies and gentlemen, this concept of a framing effect, always remember, at times it's how you present yourself. The reality may not be what we expect, but the presentation is quite important. The presentation is quite important. Let me just allow me to share this document. 1 minute, I just share this document here. Contemporary issues in finance. Please don't take any notes, just struggle to understand my explanations and everything will be okay. You'll be able to answer this in your own way, in a very good way in an exam. So I've shared, I hope this student has been able to see. Then we have what we call mental accounting, yeah? From the word accounting, mental. People treat money differently depending on its source or intended use, e.g. spending a tax refund more freely than regular income. Ladies and gentlemen, this concept of mental accounting, there will be that money that you have not worked for, all right? Sorry to use this example, perhaps corruption money. So if it's corruption money, of course, in this case, you can't use it the same way you would use your own earned money. The corruption money will tend to be spent hazardly. Now, we go to the most important section, application in markets. Behavioral finance helps explain why markets can be volatile, even when fundamentals don't justify large swings. Help explain why markets can be volatile. Prices changing every now and then, even when the fundamentals don't justify large swings. Like there is a time pieces of land were just increasing. Price was just growing every day. You just go to a place with lots of land, you get a price that you're being asked is quite, it's because of what? Yeah, this hard mentality. People are being pushed. Let's go to Machakos, and then we go there, buy some pieces of land that are quite what here inside almost something that is quite like a desert. Shows that investors often make decisions based on emotions or biases. rather than rational analysis. There are very few investors, ladies and gentlemen, who you will convince that, hey, you know what? Please give us your cash flows. We compute net present value, because rationality means what here? Work with numbers. Make decisions based on numbers. Make decisions based on numbers. But if you're now making decisions using emotions, I mean, then that is irrationality. All right. All right. Rather than rational analysis. So the most important thing, you'll be asked this question for 3 marks about behavioral finance. Behavioral finance. If you're today asked to describe what behavioral finance is in 2 minutes without making reference to any place, now I'm looking for the third person to give lunch. Today I'm giving lunch. Today I'm giving lunch. What will you tell us, ladies and gentlemen, in lab set? Yes. What will you tell us, ladies and gentlemen, is behavioral finance in your own language? What is behavioral finance in your own language? Yeah, Hardik. Just type something there. Please try to type. You always have so now I'm giving you a reflection moment to look back, and I mean, Mwalimu has used over 1,000 words. What am I able to remember? What is behavioral finance? Psychological instincts that influence decisions on finance. What influences us in decision making on finance? Making financial based on by judgment and not the market fundamentals. I love that. All right. If I may just mention something, ladies and gentlemen, whenever we talk of behavioral finance, we are looking at our investment choices. What is really affecting us as we make these choices here? If whatever influences us is not mathematical, is not monetary, all right? It is these other things. Then we are bringing in our emotions, our psychological effects into investments. And at times in this case here, yes, you can't blame anybody. We shall be able to make investment decisions on the basis of our psychology, on the basis of our emotions, on the basis of impulse, because we're being pushed internally because of our ego. We would want to show people that we are doing very, very well. So we end up making wrong decisions. Wrong decisions. At times it could be good. Wrong decisions. And we could also be influenced from outside by our friends, the harding concept. We could be influenced because of the concept of anchoring. Somebody told us a very, very long time ago, our father, for example, that land is the best investment. Yeah, following the crowd. I love that. Land is the best. So we keep on thinking that land is the best. And then there are other opportunities outside there. Thank you very much. You'll be able to allow me to move to the next concept. Today, I'll be able to release you quite early in the next 10 minutes. So today, I would also want to take this opportunity to teach you something small about big data. What is big data? What is big data? Is there somebody who has ever heard of big data? Yes, as I wait for you to describe, I've heard of big data many times because I'm a data analyst myself. So you talk of big data, this is voluminous data being generated by or for companies. And this data must be coming from these companies or to these companies at a very high speed. We call it velocity. Velocity. Look at, for example, EFDL today. If you go to, actually, let's just come back. If you go to CASNEB today, CASNEB, if they wanted to harvest the data that is going to them, it will be big data. There are students who are commenting on their social handles. There are students who are sending them emails. There are students, in this case, who are calling them, right? All right. Yeah, you can see this student has been able to give us, ladies and gentlemen, in this case here, definition here, extremely large and diverse collections of structured and unstructured and semi-structured data that continues to grow exponentially over time. Over time. time. Great, great, great. I'm waiting to hear whether there is anybody who will be able to give me any other kind of definition of big data. But the most important thing, it must be voluminous. It must be coming to us at a very high speed. And for us to call it big data, it must be valuable. It must be valuable. It must be able to enable us make improvement in our processes as a company. Big data. So then allow me to simply come here and share my screen. And then you guys will be able to select the students who feel that today they have participated a lot for them to get my lunch. So big data in finance refers to the use of vast amounts of structured and unstructured data to enhance financial decision-making, risk management, and operational efficiency. It enables accurate forecasting, personalized services, and a quicker decision-making. Then we have what we call the 5 V's of big data. The moment you use any three, volume, the sheer amount of data being generated, e.g. the transactions data, social media posts, market prices, example stock market data generated every second from multiple exchanges globally. Velocity, the speed at which data is generated and processed. Example, high frequency trading where decisions are made in microseconds based on real-time data. Variety, like Isaiah told us there, we have this thing of structured, unstructured, and semi-structured. The different types of data, structured, unstructured, semi-structured. Example, financial news articles, social media posts, and company earning reports, in addition to the traditional spreadsheets or databases. So as we're going to see, what goes to a database, ladies and gentlemen, that will be structured. Because from a database, you can query using what we call SQL, structured query language. You can query, that becomes structured. But if it is students in this case here, for example, are trying to throw some not so nice words to customers, that will be unstructured. Because there is no way you'll be able to put that information, for example, into some instrument, and then you analyze them, you count them, right? So we have others even showing emojis. Those are others are semi. We will look at that, but for us to talk of big data, we must have a variety of data. Some data must be structured, other data must be unstructured, other data must be semi-structured. If that variety is missing, then automatically we can't call that big data. No, we can't call that big data. Then we have veracity. Veracity is all about reliability, the quality and reliability of the data. Example, data verification tools that help ensure financial reports or stock prices are accurate. So veracity is about faithful representation. It's about truthfulness. If you have big data that is untrue, then that can't be called big data. Value, extracting meaningful insights from this vast data. We must be able to extract data. I remember one time, ladies and gentlemen, now, ODM went to court. In this case here, they were saying that William Ruto had not won elections. And then they were given lots of data. Yeah. And then they were told, in this case, these lots of data, you go ahead and get whatever you want to demonstrate to us from this big data within like a day or 2 days. I mean, the data was huge. Were they able to get, in this case here, any insights out of that data? The judge said that whatever they were giving out was hot air. All right. So remember, this can only be valuable if we are able to draw insights that can influence our decision making. But what I know where ODM went wrong, they never went for very, very qualified database analysts. If they came to some of us, I'm very good in SQL. I'm very good in my SQL. I would have, in this case, for example, been able to trace Jose Camargo. How many times Jose Camargo was able to punch into the database? What was he able to change there? I'm so sure they never just got, okay, I was trying to look at this guy they had hired, but I mean, it's not a name that you will hear in terms of what here, querying databases. They never queried databases enough. For example, I would have wanted to know how many people are in the deaths register and they are still on the database of IBC. That would have been a very good ground. Could we be having, in this case, even some people who never voted, or rather who voted, and then they don't even have national IDs? All right. They could have hired like 20 database experts, database engineers to query. But the most important thing, ladies and gentlemen, and we should never forget the 5 V's. Let me see whether there are students who are trying to follow. Is there somebody who remembers any V? Any V, the 5 V's, the 5 V's. Any student who is able to remember? Yeah, wild goose chase, great. And some suggested volume, the velocity, speed, value, volume. Yeah, you guys are really following. We have veracity, variety is the last one. Variety is the last one. And then you'll need to know how to describe them because these will come in your exam. Now, practical examples of big data in finance. How do we use big data, for example, in the banks? As CFOs, chief finance officers, like in algorithm trading, using big data to analyze market trends, news, and the social media to execute trades at optimal times. So we have an algorithm. This algorithm is able to walk around. Yeah, seeing what stocks, for example, are selling best at what prices. And this algorithm is able now to advise. Tell us in this case, if it's KQ shares, of course, we haven't yet reached there. But these big stock exchange are able to use this. All right, they're able to use this. Risk management, analyzing vast data sets to assess potential risks and predict financial crises or market downtimes. Ladies and gentlemen, remember how banks, banks nowadays, they simply look at, for example, data from their customers. They're able to know who withdrew what at what time. They can easily estimate, like if it's Equity Bank, we shall be having 20 million Kenyan shillings in this branch at night. Because this is the time when the people are moving around. I mean, like if it's Friday evening, people would want to make withdrawals. All right. So we are able to use, ladies and gentlemen, this concept of big data analysis or data analytics to do risk management. Risk management, we are able, ladies and gentlemen, to use big data analytics for purpose of fraud detection, analyze transactions patterns in real time to detect anomalies and prevent fraud, e.g. credit card companies analyzing spending patterns to detect unauthorized transactions. Like this morning, I just found something on my email. We just try to get it very fast. I show you these things, you need to see them practically. So my Gmail. Yeah. Yeah. Great. Great. So when I come here, ladies and gentlemen, you go to see, like now they come and tell me a security alert for this. And you sign in on Windows. And I mean, I don't have these Windows kind of a phone here, or rather kind of, a new sign on Windows, etc. So we noticed a new sign in to a Google account on a Windows device. If this was you, you don't need to do anything. If not, we will help you secure your account. And I was able to recover it. So do you think in this case here that Google has put so many people around who are able to detect this kind of frauds? No, it is algorithms. It is what we call machine learning. Machine learning. All right. All right. Then we have in this case here customer insights and personalization using data to tailor products and services to individual clients. Examples, banks offering personalized financial advice or targeted investment opportunities based on transaction behavior and preferences. Remember initially, we used to go, for example, to banks like Equity Bank. You see how busy they are using that revolving door. You simply get to the revolving door and then you don't enter the banking hall. You simply exit, enter, and then you exit. Because I mean, some of us don't like queuing. So using machine learning, most of these superior banks out there, not in Kenya, they were able to know how many people were just running away because of queues. They were able to establish that people who run away like that are well-to-do. They have money. So they started in this case here having special counter for such people, such that if you want express banking, come over here, you pay 1,500, as other guys who are queuing are paying just 100 or 50 shillings. So we can use this big data also to understand behavior of customers, So we can use big data for purposes of innovation. We are able to innovate. We are able to come up with new products which are tailored to our customers, what they need. So last but not least, ladies and gentlemen, we have sentiment analysis, analyzing social media, news, and other unstructured data sources to gauge market sentiments and make investment decisions. Example, using Twitter data to predict stock movements or economic events. What are people saying about RCM outside there? So for example, people are saying about RCM out there, ladies and gentlemen, we have a big data analysis tool ourselves. We have in this case here what we call Zoho. We just get it. Zoho Analytics. Yeah, they have a very good tool. Zoho Analytics. Yeah. To be able to see our Zoho Analytics. So we have here, for example, you'll be able to see the brand is RCM throughout. All right. So like now I'm able even to tell my people that I mean, here in terms of engagements down, every other thing is up and up. And you know, ladies and gentlemen, to run a business, you have to rely on this technology. All right. Like now I haven't checked since morning, but if I come, I'll be able to get here the brand. No, let me just check something here. Like I can go to inbox. No, I can come here. Just a moment. Connections, collaborate. No. I want to show you, for example, how we are even able to see how our competitors are doing. Let me check here with monitor. We have people, experts who run this. So like, for example, we can easily see how many times RCM has been mentioned. Oops. Like mentioned here, yes. How many times have we been mentioned here? Yeah, like I can see Job Kenyani has mentioned that. Right. Now you see, these are algorithms. I'm not very good at using it because basically for me, what I normally do is to provide high level management. So now the social media, I'm able to see, for example, was not answered our Facebook pages, what is not happening in the general trends. But the people are very good at it. They will be able to show you, for example, how Zoho will be able to analyze, for example, RCM versus Visions. And then you realize that Visions is a big brand, but they drop the ball somewhere. They drop the ball somewhere. How? They're not serious with their social media. All right. All right. Ladies and gentlemen, that is the end of my today's presentation. Much love to you guys. See you later in the evening at exactly 6 p.m. Oh, I owe some people, right? I owe some people. Nitume lunch. Okay. Veracity. So who won? Who gets my lunch here? So what I'll do, I don't know whether these are two classes. Perhaps I could send 2,000 shillings to one of